Hello everyone, this is Evan from the Trade Risk here on Saturday, February 27th with a weekend market recap video. We are first going to analyze the current market environment, and then we're going to get into some of the other major markets, skip the individual names and trade ideas. Let's just focus on what's going on in some of these key markets. We'll start with the SPY ETF, and you can see the bulls continued their rally this week, up 1.61%. This is the third week in a row where we've had a higher close than we opened in. And there's a few key things that happened this week, so let's take a look at it from the longer term weekly perspective. This is what we're looking at. You can see with the close that we had today or on Friday, we're above the 8-period EMA. We're still below the 20-period, but you can see it's starting to get sandwiched in between them, so you can see the cross currents and sort of the momentum fight, tug of war, if you will, when markets start to trade in between these types of moving averages. Let's take a look at the daily time frame. Let's look a little bit closer at what happened this week. We started off at the highs here, right at this critical 194.50 area on Monday with this gap higher. We had a 2-day shakeout, really, a one-day close on the lows here, and then we saw the strong reversal on Wednesday off of the 190 retest, the 190 gap fill, a pierce of this 20-period EMA, all of these things, all this sort of confluence right here, right around 190, where the buyers stepped in, took charge, and closed us at the highs. That was a very constructive day. Saw follow through Thursday, and then a little bit of some hesitation here on Friday. We closed on the lows after a gap up, so kind of uninspiring. Perhaps we're a little bit tired here, but I'd argue that we're still in some pretty bullish alignment here. We took out and closed above this 194.50 area, and again, we didn't close the week at the high, so it wasn't as strong as it could have been, but still the bulls certainly in control here. There's no reason to fight this in my opinion, as long as now we have this bullish alignment of moving averages. I think that's constructive. We're above this resistance, we're out of this range. All of these things point to some strength here, and while it is perhaps late as opposed to getting involved somewhere in this push or a couple of weeks ago, or even on Wednesday's reversal, I think those were more actionable spots to maybe jump on board. I still don't see many reasons to want to fight this right here. I think the risk is still to the upside, that we can continue to squeeze the non-believers. The fact that this move happened so quickly, I think there's still a lot of panic out there that this type of volatility, this type of action like we saw at the beginning of the year throughout all of January and beginning of February can easily come right back, and it surely can, but for now things are firming up. Breadth has been improving. The NYMO right now is at overbought territory. That is a slight negative, is that it is pretty stretched, but I think all good markets, all good trades, all good momentum moves, they tend to move higher, and sort of persisting those overbought or oversold conditions. So for me, I think everything's pretty constructive here. I think you need to, of course, see if we see some follow through weakness back below 194, close below this band of what was resistance, would be your first sign that, okay, maybe we're not quite ready to take out this level and move higher. But again, I still believe, based on everything I see, the risk is to the upside. One other thing that we tend to look at when we put on some of our momentum trades is we'll look at Bollinger Bands. We'll look at how they're forming. Take a look at what the Bollinger Bands are doing right here in the SPY. You can see that they're expanding higher, racing higher above price. They're still encapsulating price. There's still room for price to sort of catch up here and test the top end of this Bollinger Band, but this shows that volatility is expanding right now. That is constructive. You don't want to see it still pinching in as the market tries to move higher. Typically, this is exactly the type of formation you want to see in a expansionary sort of move here. So all these signs still point me to believe that higher is still probably the most painful point at this time. And the next big level, 199, I think the top top end of this range here back from September and August in 2015, effectively retesting the breakdown level from 2016 from this year, and it would be challenging the year-to-date highs, trying to go positive on the year. So I think all those things could point to a retest of maybe 199 in the future. Again, not a prediction. I'm just saying with everything as is, with all of the evidence here pointing, I think the trend is more likely to continue. But again, that can all change tomorrow. My opinion can change. I think, again, you just need to watch the levels, respect price action, and just trade accordingly. But that's sort of how I'm looking at the market right now. If we go to some other of the indices, IWM, Russell has been outperforming on this leg recently. You know, to be all fair, it led on the downside with some of the most extreme moves of lower prices in January. It is recovering faster, so it's, you know, really just playing catch up where maybe it otherwise should. I am still long. We are still long the IWM via TNA, so the leveraged 3x bull shares here of the IWM. I don't see any reason just yet to cover this. It hasn't quite hit our target yet. You can see we got involved in it on Wednesday. I think I spoke about it on the video I put out there, as it was closing at the highs at a pretty important breakout area. Had some nice follow through Thursday, some continuation Friday, outperformed nicely on Friday. Look at the 63 basis point higher close on Friday versus the SPY down 23 basis point. I like that. I like that this has been leading on a relative basis, and I look to take some profits off up here closer to this 104 area Monday if we can get it. If not, we'll see how that acts. But right now, this is starting to come together. The Qs also trying to come together. Still a little sluggish. You can see it's in this band right now that it's challenging 104. See how that plays out. Similar comments do apply, though, in both of those indices, similar to what we talked about in the SPY. Now, if we look at TLT, for example, cooling off a bit on Friday, down 1%, nearly 1% on Friday. If you look at the weekly chart here, you can see still struggling with the prior pivot here from March and struggling to hold above 132. So definitely looks like it needs a little bit of rest here, and it, you know, deservedly does, given the move that's happened for all of 2016, really. So let's see if we can go sideways here, base out, and make its next move. Just looks like it needs a little bit of time. Gold, also a slight gap down on Friday, closed down 70 basis points. Buyers did step in, though. You can see still holding above the 8-period EMA. Very bullish alignment of moving averages here. Looks like some high-level support, maybe around 115 or so. Keep an eye on that level, but still looks pretty constructive, holding pent up. That is constructive. Silver, on the other hand, taking a big beating relative to gold, down 2.71%, already coming back down to maybe retest this big breakout area from February earlier this month. This looks a little more damaging and a little more cause for concern here. Seems like an need this to just set back up, move sideways, and just do something before continuing on that. USO continues to move sideways here. We've talked about this. Our opinion is this will stay range bound for probably longer than most people think. I think, you know, between $8 and $9.60 or so, $10 really, which is what, about 20%. I think it's all fair game in there over the next few weeks, maybe even months, for this to carve out. We'll have to see. Also, you know, just keep an eye on these extremes when it gets close to it, see how it acts there. But right now, just being volatile and doing its thing down there. UNG up 63 basis points on the close Friday. You can see two hammers, not quite textbook hammers, but you know, some signs of life down here. Maybe we have some type of short-term bottom again, fighting a huge downtrend and much larger momentum to the downside. But keep an eye on it. Really needs to get back above $7. That's when maybe you could call this some type of false breakdown, and you start to see some real squeeze or momentum push to the upside if it can start to break back above $7, and then maybe this declining trend line. And that's all we're going to go through in this video. I hope you enjoyed. Hope you had a good week trading. If you like the videos, please do subscribe. As always, thank you for watching, and I will catch you next time.